So I thought it'd be a fun little experiment to use a calculator to see how much Apple stock could potentially be worth in about 10 years if you invested in it today. So obviously these numbers can change based off of the market, where it's currently priced at, and a whole bunch of other factors, like so many other factors. So what I figured is, yeah, let's just go into this and check it out, because I think it'd be interesting. I do know that, some of these numbers might not be feasible for most people, but really consider that if you just take your time to invest even little by little, it can still have a big impact. So hopefully this will get you excited to see how your investing now can lead to really cool things. So this is what I did right over here. I already put some information in the calculator. This website actually just lets me put in the ticker number and it pops up some information. So as of this recording, the current price is $179.29 per stock price. And then you can see here, I put in 100 shares, which would equal out to about almost $18,000. And again, I know that for most people, like $18,000 all at once into Apple or any company for that matter is most likely not feasible. But I just want to give you this example, and we can change these numbers too. I can show you what buying 10 shares would do today and so on. So we're going to do a holding period of 10 years. I just want to see how this kind of works out. Expected dividend yield. This is the current dividend yield that the company pays out. So you can kind of go through this process and change these numbers if their numbers are different. And then the quarterly distribution is how often they pay out their dividend. Annual contribution, we're just going to pretend like we're just doing this flat out one-time payment, and then I'll run some other numbers as well. We'll do a 0% dividend tax rate. It says expected annual dividend increase percentage. I went to seekingalpha.com, which is a website I like to use, and they actually show you right over here that in the last 5 years, on average, it's about 9.18%. I'm just going to do 10% to round up, make it a little easier there. And then expected annual price increase, I did 8%. Obviously, this is going to vary, but I think with 8%, it's pretty reasonable for a company like Apple. And then the DRIP, which is the dividend reinvestment plan, we're going to go ahead and say that whatever dividends get paid out, you're just going to put them right back into this stock. So what we're going to do is look at this number. I already hit the calculation, but real quick before we do that, because obviously all this content's always free for you guys. If you're somebody who needs to go ahead and refinance student loans because you're paying some really, really high interest, check out the link down below for my friends Earnest. What they do is actually help you refinance to lower your interest and possibly save thousands of dollars, which then you can use to invest in companies like Apple or any other companies and really get the ball rolling on the other side of investing and having your money actually working for you instead of paying it out. So check out Earnest down below. The cool thing is they actually give you a nice bonus for refinancing your student loans, and it's all entirely free. So you make money, you save money, and now you can start investing more of it. So let's go ahead and take a look here and see. So after 10 years, your total balance, which again, you paid almost $18,000 in, these are estimates, would be about $41,600, give or take, right? So that's a total return of 132%. Your annual return, because of your dividends and your price increase for the actual stock, comes out to about 13.2%. And you can see here your average dividend income after the 10 years would be $440.38 in a year. So if you could divide that by 12, that's how much you would be making from Apple just for owning the stock, not necessarily selling it or anything else. And then you can see your total dividends that you got paid out was about $2,227 over that course of time, which again got reinvested, so it helped grow overall that portfolio. And then there is the yield on cost right over here, which would end up coming out to about 2.95%, which is a really cool thing to really think about, where you started off with 0.49, but then because of all the dividend increases over time, you actually get a dividend yield of 2.95% because of that increase that you get for just holding on to the company's stock. Now, if you go down, you can actually break it down by every single year if you wanted to. But like I said, we can go ahead and change this up too, because like I said, I know a lot of people won't be able to do, that much at one given time. So let's say for somebody here, let's do 6 shares. So let's say you can start off with 6 shares here. So it's a little over $1,000. So let's say you got, tax return. Let's say you got a really cool bonus. Maybe you refinance those student loans and are saving a lot of money. So you can have $1,000 to invest with. Let's go ahead and say 15 years. We just want to give a little extra time for this. And then let's say you actually do an annual contribution. Let's say you do $100 a month. So that's $1,200. Oops, I hit my mic. Hopefully that still works. So we did, $1,200 annually, still zero on the tax rate here. We're going to keep the dividend increase and the share price is the same, and we are going to still reinvest with these dividends. So let's hit calculate and let's see how this kind of works out for us. So after 15 years, we would end up with almost $40,000, total return of 109%, annual return of 7.26%, an annual dividend of about $656. And then you can see here our total dividend payout was about $2,970 with a yield on cost at 4%, which is kind of like a golden number for a lot of dividend investors. So seeing how, changing these numbers, obviously adding an additional 5 years, even if you can't start off with, putting down $18,000, even if you started off with $1,000 and then did $100 every single month, if you could, that can still equal out a really good amount of returns for your effort, even if you can't do those big numbers all at once, which is why it's so important to really focus in on investing for the long term, even if you don't have a lot to begin with, because a little bit can go a long way. But the biggest thing is staying consistent when it comes to your investments, because actually investing is probably the hardest part of investing. There's so many things to learn. There's so many things that you can do right and wrong and all that stuff. But the hardest thing that most people have when it comes to investing is just staying consistent, just going through the motions of investing $100 a month or $200 a month or $1,000 a month, whatever the case may be. It's that consistency that is the hardest to keep. So what I usually implore people to do is to keep on learning and growing when it comes to their investments. So I actually want you to check out my next video right over here so you can keep on watching and learning and growing. My name is Dennis, and I'll see you in that next video.